Welcome back, and thanks so much for joining us here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. It's 419-794-3030. Online, arhq.com. If you missed the first half of the show, you want to catch up, previous topics that we discussed on the show, all available for you on demand. Just search for America's Retirement Headquarters wherever you consume your media, Apple Podcasts, Spotify, YouTube. It's all there for you to check out. Once again, search for America's Retirement Headquarters. The stock market continues to show an upward path as we move toward the end of the year, but will it continue into 2025? Researcher Ed Yardini offered this positive outlook on CNBC.
But all in all, I would stay invested. The outlook remains fairly upbeat. Clearly, there's risks out there, but the economy has proven itself to be remarkably resilient. I think interest rates have normalized. I don't think the Fed really needs to lower interest rates. And meanwhile, the outlook, I think, is going to be somewhat bumpy with regards to issues of tariffs, but tax cuts and deregulation should be good for earnings.
Now, are you on board with all the optimism, or are you telling clients to proceed with caution?
I think I was raised to be positive, and so I, am positive about things as a whole in the country, in our economy, and in the market. I'm also realistic, I would say, in the fact that, if we look at the stock market, some of the reasons why we want to be optimistic right now is we are in an environment where the Federal Reserve is lowering interest rates in a non-crisis environment. And if you go back and use history as a guideline, when we're lowering interest rates in a non-crisis environment, a year later, that typically is positive news overall for equities. Number two, we have a new administration coming in January, and the Trump administration is really focused on U.S. companies. We have some risk that are out there as well. A couple of the ones would be the knowns, right? So we know inflation risk is still here. We know the fact that if the administration puts tariffs on, foreign imports, that a lot of times those are going to get pushed down to the end user, the consumer, which could result in higher prices, bringing inflation back into the equation. I know inflation is actually still the real deal with taking my kids out for dinner or getting groceries or traveling. And, if we have to look at the government spending, doesn't matter what side you lean towards, the government on both sides has gotten out of control with spending. And so we have this, massive debt problem and, out of control spending that creates inflationary risk. But the big one that I think, things and people need to be aware of is you need to plan for the unexpected. So I think that the markets can perform, real positive moving forward. Healthy companies, strong companies should, thrive in a good environment. And that's until something, unexpected comes up that, just quickly changes things. And if you use history as a guideline, what you'll notice is that when market downturns happen, they happen fast. It could take years and years to build up bull markets or gains overall, and it takes oftentimes a much shorter period of time when the blow up happens that the market gains are given away in a quick hurry. An example of that would be COVID. We saw the markets fall faster than really I think they've ever fallen in the past, faster than they did, in the 1929 crash. Luckily the government stepped in and bailed out the economy. We could go back to the financial crisis of 2008. I don't think anybody really realized how leveraged banks and families were in the housing crisis that happened. Or you could go back to the Y2K 2000 crash and, the dot-com bubble burst, caused tremendous pain for 3 years for, many investors that are out there. So what you want to do is you kind of want to be running what I would refer to as the fire safety drill. So again, I think you should stay optimistic, and if you have 5, 10, or longer time frame on your side for equity investors, I wouldn't worry so much about what's going to happen next month or next year. Focus on the long term. But for those folks that want to take some extra precautions and are in retirement time, It's time to run that fire safety drill. And how you can run the fire safety drill is determining if and when the market starts to go down, do you have an exit strategy in place? And most people in that situation would answer no. So just like you taught your kids, or I did, back when they were little at the house, when we ran through the fire safety drill, you don't want to practice the fire safety drill when the economy's on fire. You want to do it now.
Right.
Now you can make much more logical decisions, and then your likelihood to get less or not hurt is going to be significantly improved by taking steps from a non-emotional basis while the markets are at record high. And a couple of things that you can do is, one is you could take some winnings off the table. If you wanted to take some of your profits and move them from at-risk investments to investments that are not at risk, you'd want to do it while the markets are at record high. Think of investing as buy low, sell high. Markets are at record high. Number two is you could take and you could put what I would refer to as a circuit breaker on a portfolio. We have a couple of different strategies in our models that are, as an example, like our Iron Retirement series. And in our Iron Retirement series, we're looking at technical moving averages of the markets, and we're making a determination whether we want to continue to lean into equities, or if equity positions start to go bad, then we would get more defensive and begin to reduce our equity exposure. There's also financial products that are out there that will help limit the amount of losses. So they allow you to stay in a position to be able to take advantage of rise in equity prices, yet eliminate and or reduce the amount of downturn. So I want you to stay optimistic in the stock market, but I want you to run the fire safety drill. If you don't know how to run the fire safety drill, give our office a call. We know exactly how to help you run that fire safety drill, and then we can educate you about your different choices and options. That way you don't have to wait until something bad happens. You already know the plan in place that would be designed to help protect you if and when things get bad overall in the market.
We've spoken previously on the show about how my son started the Scouts this year. He's a Cub Scout, but I'm always reminded of my time in the Boy Scouts, and then the motto, of course, the slogan, be prepared. It's the same sort of thing when it comes to your retirement planning. You want to be prepared, hope for the best, plan for the worst, have a plan in place, have that fire safety drill run, then have that retirement team action plan put together for you. All you need to do to get started is set up a time to speak with America's Retirement Headquarters. Start putting those plans in place, 419-794-3030, or go into the website at arhq.com.